Good morning, everybody, and welcome to this webinar entitled Raising the Stakes and Tackling Financial Crime in the Gaming Industry, Managing the Ever-Evolving AML Complexities of Cross-Jurisdictional Requirements. During this seminar, we will be discussing financial crime and regulation in the gaming industry. And the reason for focusing on this topic today are that gaming can be used as a way for criminal actors to gamble their criminal proceeds for fun, or in some more complex cases, to purposefully cleanse their illicit income. The scale of the threat, particularly from online gambling, poses significant financial crime risks, as stated, for example, in the EU's two most recent supranational risk assessments in 2017 and 2019. However, this threat is being tackled by gaming regulators and operators in a range of creative ways. For the next 40 minutes, followed by a 10 to 15-minute Q&A session, our four panelists today will touch upon the following specific themes: the emerging and enduring financial crime risks in gaming, which include growth in online gambling and associated difficulty of knowing your customer, use of anonymous e-money and virtual currencies, the latest regulatory developments in gaming, especially in Malta and the UK, and the persistent challenges facing gaming operators when it comes to threat mitigation and regulatory compliance. My name is Karel van Randwyk, the Chief Growth Officer of Themis, and will be moderating today's webinar. As background, Themis aims to reduce the global impact of financial crime through a combination of insight, intelligence, and innovation. Joining us from Malta are Joseph Attard and Manfred Galdez. Joseph oversees the functions of the Malta Gaming Authorities, that's the MGA, Anti-Money Laundering Unit, which regularly conducts AML examinations and inspections within the Maltese gambling industry. He also forms part of the Supervisory Council, which is responsible for ensuring the integrity, consistency, and development of the regulatory functions of the MGA. Manfred is the managing partner at ARQ, a professional services firm based in Malta, where he also leads a multidisciplinary team that advises major domestic banks, financial institutions, and top-tier gaming companies, particularly on AML CTF compliance. And joining us from London are Richard Williams and Nick Parfitt. Richard is a partner at Keystone Law in London and is ranked by the Legal 500 and Chambers and Partners 2021 survey as a leading gaming lawyer. He advises both the land-based and remote gambling sectors on regulatory issues, and his team is often brought in to advise on licensing due diligence and change of corporate control applications on corporate deals. Nick, as head of market planning at Accurus, is responsible for determining Accurus's risk intelligence's go-to-market strategy, thought leadership, and subject matter expertise. He has over 20 years experience with more than 10 years in financial crime sector, where he has helped a number of tier one financial institutions assess, implement, and improve their AML, KYC, sanctions, and fraud operations. To our audience, I encourage you to submit questions throughout this webinar via the Zoom question panel. To start off with, 2020 has been a year that has had unprecedented impact on the gaming industry globally. Perhaps a general question to start us off with. Joseph and Nick, what in your view have been the key developments in the gaming market from a financial crime perspective? What is the current scale and nature of the threat? Joseph, do you want to take this one first?
Sure, thanks. First and foremost, thanks for the invite. Very happy to be here. I believe we need to approach gaming from two particular point of views. So you have the land-based with the traditional casinos, which process a lot of cash transactions. And I believe inherently that is one of the major risks with regards to casinos, the use of cash and fast transactions, a lot of movement going on there. And then you have the remote gaming sector, which in Malta is quite large, and it attracts a different type of risk. Typically at this stage, with regards to the remote gaming, you have a lot of anonymity involved unless there are the right controls adopted. We have seen a particular scenario occurring, particularly last year, whereby there was a major increase in the remote gaming sector, people being locked at home, of course, and making use of such services. People were also using the remote gaming sector to socialize. However, this induced risks with it. We have seen reactivating of a number of dormant accounts. Some of these could have been used as mules unless proper controls were adopted. There was also the halt of all sports activity. So people that were traditionally gambling towards such products, gaming products, sports betting, they shifted towards player-to-player games such as casino. Again, this is a higher risk product, so there was a lot of things going on. We also seen resources going to work from their home, of course, adopting remote measures, which also was it induced a disruption in the mechanisms until at least for the beginning of the lockdowns which occurred around the world, basically. So basically, as a nutshell, so it is very important to distinguish between the two natures of gambling. So there's the land-based and the remote. Two different approaches, which one would need to adapt towards the both. And of course, the trend is increasing. So more gaming companies are opening, and of course, with that, there is new risks emerging, particularly with new products, even payment products such as cryptocurrencies, which are so trending right now. There's an uptake of that as well. So quite a lot of things happening in the sector at this point in time.
Thank you, Joseph. You're quite right. There is a lot happening with many new influences from different participants. Nick, your views on what the current scale and nature of the financial crime threat to the industry is?
Yeah, I think, and thank you for the opportunity around this. I mean, thinking about, it's been quite a year, to say the least. And I think just looking at the regulatory environment from the UK and Malta, what we've seen is they've been incredibly busy. There's been a lot more activity than I would have thought that would have been going on, given the backdrop of everything else. So for the UK, fines have increased significantly. The UK Gambling Commission issued at least 7 outcomes of investigations, which range from suspension of licenses to company closures, as well as large fines for regulatory failings. And there was a much bigger focus on social responsibility in terms of the number of investigations and the outcomes issued. But there was still, anti-money laundering deficiencies, as you kind of expect. Although, given the maturity of the UK market, maybe that is a little surprising. Malta, the Malta regulators, what we saw there was, more than 500,000 euros in administrative penalties for firms who had failed to return risk assessment questionnaires. I mean, that's really quite staggering that would be firms that wouldn't actually return these risk assessment questionnaires. And I think that's an interesting, trend to have a look at and see where that goes in the future, because that's really, really fundamental and smacks of lack of real culture and taking it seriously. Also, there was the largest ever fine of 700,000 euros by the FIAU for a gaming company that was identified to have violated 10 different provisions of the law, end quote, by the FIAU. And then we also observed a lot of activity in Malta with our own clients as the FIAU increased their own checks and audits on gaming companies in general. So there's been a lot going on, and the intention is really to deliver a more positive position of the changing and newly shaping regulatory frameworks that Malta has been working towards for some time now. So those would be my key observations.
Nick, thank you very much. And a very interesting set of developments there, and also the role that the gaming regulator in the UK plays in keeping an oversight of what is going on in the industry. One of the most significant recent trends we have seen is the growth in licenses and requirements that gaming operators have to manage across jurisdictions. This is especially true with new markets like Germany and the Netherlands opening up. Manfred and Richard, how have operators been managed to keep up with this increase in cross-jurisdictional regulatory requirements? Do they tend to have separate processes for each market, or do they attempt to cover all regulations in one? Manfred, if you'd like to take this question first from a Maltese perspective.
Of course, Kyle, thank you very much. Thanks for the invite. It's a pleasure to be here. So yes, ultimately, the first impression one normally gets is that considering that most of the jurisdictions are EU jurisdictions, then the rules are the same because of the EU directive, and most countries, practically all countries, comply with the FATF recommendations, and therefore one would expect a certain level of harmonization, but it is not really the case. In fact, rules differ quite a bit from one jurisdiction to the next, even though the basic principles apply. Then there also are issues of interpretation. In different jurisdictions, you have varying interpretations on the trigger for customer diligence to come into play, for example. So the €2,000 threshold that would trigger customer due diligence isn't always calculated in the same way. Some look at deposits, some look at withdrawals, some look at deposit and withdrawals. Some consider recycled winnings, others do not. Even regulatory expectations vary from one jurisdiction to the next. The weight given by one regulator to the business risk assessment, for example, varies. What aspects of the business risk assessment are given more weight vary from one jurisdiction to the next. So yes, this is one of the biggest challenges. So the absence of harmonization does cause concerns. In fact, in a recent survey we carried out with 51 operators, we had 42 saying that they were concerned about the non-alignment of regulatory requirements, and 33 said that this was either challenging or very challenging for them. So normally what happens in practice is with the larger operators, the top tier operators, you would have dedicated individuals who would focus on one particular jurisdiction. And then with the medium and smaller sized operators, you'd have a compliance team that is trained in various rules. But underlying all of this, the principle is that yes, the process has to vary from one jurisdiction to the other because of these differences. What we normally see in other industries, taking the financial services industry, is that you tend to gravitate towards the stricter rules. So you apply the stricter rules that apply in one jurisdiction across the board because it is the easier thing to do and is the more prudent and safer thing to do. But this doesn't really apply in the gaming industry because we know that the customers here are more volatile. There's no loyalty that one has, or at least one used to have to his bank, for example. So knowing that stricter rules, more information requests, etc., tends to drive business away, you don't have the same level of, as I said, that ability to maintain your customers, and therefore the stricter jurisdiction rule doesn't always work within this industry.
Thank you, Manfred. Very challenging for multi-jurisdictional operators. Richard, what is your perspective, particularly looking at it from the UK?
Yes. Good morning, Carol, and good morning, everybody. Well, Manfred, I think, has very helpfully analysed the anti-money laundering issues there. I mean, you would expect there to be consistency across Europe in terms of anti-money laundering regulations, but in actual fact, even though the UK adopted the fifth money laundering directive through the regulations, we do find there's an inconsistency in approach. Obviously, there's differences between the regulated sector, being casinos, and the unregulated sector, but that approach tends to go across the whole of gambling, sometimes unfortunately, because you get regulations being applied to sectors that are not technically regulated. But yes, we do find that there may be differences in terms of enforcement of those regulations from money laundering perspective across Europe. So you may find that something that's happening in Malta, in Great Britain or UK, we would say that the application of the regulations was different, which shouldn't be the case, but unfortunately is. So you get different regulators applying different rules and what they consider to be the requirements of the the money laundering regulations. But setting aside money laundering, you've got, of course, in every different territory within Europe, you've got different rules on advertising. In Britain, we've got the license codes and conditions, which are actually changing at least every 6 months. And very often it's difficult for lawyers to keep up with the changes to the license conditions, let alone for the operators to keep up with the license conditions, all of which potentially is a criminal offence. You've got things like social responsibility rules and regulations, which will be applied differently across different international jurisdictions. You've got remote technical standards, which would apply to, say, games being developed for the market in Great Britain, but may be different from a pan-European approach. So it's incredibly difficult, and I do sympathise with operators who are in markets across Europe or internationally because of this inconsistency of approach. And of course, it all goes back to the original principles that there was no freedom of movement of services. So each territory within Europe has its own gambling, is entitled to have its own gambling legislation and makes its own rules. But that is incredibly frustrating and difficult for an operator trying to operate across these markets, and incredibly difficult not to fall down, as I say, even with something as technical as a license condition, which can easily be breached.
Richard, thank you. It must be very challenging for operators then to have multi-jurisdictional operations, let alone online operations as well. Now for a little bit of activity for our audience. We're going to run a short poll, and the question is, which of the following do you see as the key financial crime risk in the gambling sector? These are the key risks and vulnerabilities identified for the gaming sector in the UK's very recent, and by that I mean December 2020, National Risk Assessment of Money Laundering and Terrorist Financing. As a little bit of background, we have only to look at recent criminal infiltration of online gambling by certain Italian mafia groups to see some of these risks come alive. Between 2015 and 2018, the Italian police carried out spates of arrests and seized several billion in assets across multiple jurisdictions, all in connection with illegal online gaming or money laundering through online gambling. So hopefully we can run this poll very quickly, and then we should be hearing some of the responses to this from our 4 panelists. So let's see what is coming through. And wow, ability to mask the source of funds seems to be the most pressing concern. And I'm sure the 4 panelists will highlight this during the rest of the session, but it's quite outstanding that that is the most concerning issue. Moving on, we are privileged, as you know, to have 2 key representatives from the Maltese gaming industry, Joseph and Manfred. Could the 2 of you please give our listeners in the UK a bit of a background about Malta's recent Moneyval evaluation and what key observations there are for Malta and its gaming industry on the back of this audit? Manfred, if you could take that first, please.
Yes, of course, thanks. Well, like every jurisdiction, Malta was subjected to its periodical review. Malta is evaluated by Moneyval as a member of the Council of Europe and a non-member of the FATF. We had a final report published in September 2019 that was a pretty damning report in certain aspects of it. So ultimately, the evaluation team scrutinized the entire anti-money laundering and counter-terrorism financing regime in Malta, starting from prosecutions, enforcement action, court action, asset forfeiture, supervision, and due diligence. So it was the full hog. Whoever's familiar with the evaluation process would know that's an extremely detailed review of a jurisdiction. And ultimately, the findings were that Malta was not doing as well as it thought it was doing in terms of meeting its international requirements. And as a result of that, there's been a lot of action being taken domestically on various fronts to make sure that there are improvements in the areas of enforcement, asset forfeiture, supervision, and even compliance by operators in various industries. The prospect, obviously, of grey listing for a jurisdiction is a serious concern because of the economic consequences. So the government's reaction and the industry reaction and the regulators' reaction, I think, has been very good, especially in the past 6 months, trying to avoid this potential grey listing and Malta being put on one of the FATF lists. This obviously has had an impact on the industry per se, directly and indirectly. So what Nick mentioned earlier was an increase in administrative penalties. We had Vivaro, one gaming company that was fined 700,000 euros, which was a first. But we also know that most of the operators within the industry have now been subject to an on-site inspection that has been extremely rigorous. In various cases, this is possibly going to lead to administrative penalties as well, because we've seen similar findings to what we have seen in the one case where we have had an administrative penalty actually imposed. So we've seen quite a reaction within the industry, much more investment in compliance. I would say the industry is more apprehensive than ever before. I wouldn't say that the industry ignored AML compliance, but I think we need to keep things within context. Remote gaming operators have only been subject to AML requirements since 1st January 2018. So the transmission of the 4th EU directive under Maltese law. And immediately, soon after that, we had this more rigorous approach by supervisors, which I think is the right approach. So ultimately, this raising of the bar across the board is obviously having its impact in entities having to align themselves with this new normal. Smaller operators are struggling because not everybody has the capabilities and the capacity to meet with these heavy compliance requirements that are being enforced to a high standard. But essentially, it is the new normal, and I think it is a positive development for the country.
Thank you, Manfred. And Joseph, from a Malta Gaming Authority, how did you see that Moneyval survey?
Yes, in 2008, as Manfred correctly stated, the 1st January 2018, the remote sector became subject persons, and this was sort of preempted by the jurisdiction. Both FIAU and the MGA preempted this and introduced a set of mechanisms and was planning also a set of implementing procedures which had to be adapted by the sector. In fact, only 4 or 5 months after the encapsulation of the sector, we issued the first set of implementing procedures. I believe this was very welcomed by the Moneyval evaluation. In fact, if one had to see the Moneyval evaluation report, you can see that the gaming sector is largely compliant with European standards. However, of course, this was the beginning of a journey, and we did not stop there. So just because it was a positive review with regards to gaming, we didn't stop there. We knew there was a lot of work. In fact, both FIAU and both the MGA increased resources. We increased tools and mechanisms in order to conduct our examinations more diligently. We have over 200 operators, remote gaming operators, which need to be reviewed. And there's a cycle of 4 years. So that goes with via risk-based approach. Of course, the higher the risk, the shorter the cycle, but in a time span of 4 years, all the sector would need to be reviewed and then start from the beginning once again. So as all the panelists are correctly stating, it is quite demanding on the sector, one would need to admit. However, I think the hard work put in there is showing results. I think in the last 2 years, we focused mainly on raising awareness with regards to anti-money laundering in the gaming sector. The FIU conducted several strategic analysis, which were shared with the sector with regards to typologies. There's a lot of cross-border typologies pertinent to AML CFT. We also delineated a couple of cases which hopefully were analyzed by the sector as well and enhanced their control mechanisms. So we are trying to do as much as possible our part as well. So not only by doing examinations, but also through education and similar to today's webinar, for example, we attended a lot of forums whereby we are discussing particular topics which are definitely valuable for the sector as well. Of course, now there's another round of reviews. One would need to see where this will lead us. However, I am confident that this sector is doing its utmost. And it is evident from the remittance of STRs or SARs. The number of SARs in 2019, for example, surpassed the banking sector, which is very unnatural for any jurisdiction. So we are talking about gaming sector being the number one of SAR emitters. However, we're not happy about that still, because we also observe that only about 20% of the sector are contributing to these numbers. So there are still a number of operators which are yet to start showing results as well.
Joseph, thank you very much for that. Looks like you definitely have your hands busy, particularly with the large number of SARs that are being reported to you, which is a good sign. Now, turning to the UK gaming industry, last month the UK government launched its review of the Gambling Act 2005. Amongst other things, the review will scrutinise the role and powers of the UK's gambling regulator, the Gambling Commission. Richard, as one of London's leading gaming lawyers, we'd be very interested to hear your insight about the likely regulatory implications of this review. And we've had a related question from one of the audience, Laura Crukate, and she says, UK government starts to review the Gambling Act. What result or impact do you expect this to have on the gambling industry? So two questions.
Sorry, Carol. Yes, go on. Is that all of the questions?
So far on the review of the Gambling Act.
Yeah, sure. So I have to disclose at the outset that I'm actually somebody who's quite fond of the Gambling Act 2005. I think a lot of this review of the Gambling Act has been generated by the press, and we've certainly had some high profile and notorious examples of extreme, particularly on social responsibility failings, where people have stolen from employers or have lost significant amounts of money. And I certainly don't say that any of those stories are positive or good for the industry. And I do agree that there has to be change with gambling legislation, but I don't think it necessarily needs to be as extreme as is being suggested. Personally, I think that the Gambling Act 2005 is fit for purpose. There's a common suggestion that the Gambling Act is out of date and it doesn't cater for remote gambling and so on. In actual fact, it does. Remote gambling is at the very basis of it. I think what has changed since 2007, when the Remote Gambling Act came into force, is that technology has changed significantly. So whereas previously you knew where your gambling was taking place, or it was very limited in scope online, we now all have smartphones and the ability to play casino games on devices with huge losses and high risk products at any time. So it's rather strange to me that you can be standing outside a betting shop, which is highly regulated, it's face-to-face gambling, and you have a very limited number of gambling opportunities, yet you could go and stand outside or stand inside if you wanted to on your phone and play a very much harder types of gambling. So that is the disconnect that's happened over the last 13 years since the Act came into force. And what the government has to do is, of course, having paid attention to the calls from the press and significant politicians saying that gambling is out of control. The government has to balance those concerns, but also recognise that in actual fact, problem gambling in Great Britain hasn't increased over the last 20 years. I think we've got 0.5% of adults who are seen as problem gamblers. As I say, that hasn't increased, but that is 300,000 people who are potentially at risk. So that has to be acknowledged. And also on the financial side, that there's £3 billion worth of revenue in taxes coming into the government from the gambling industry. So they've got to balance that and make sure that they don't completely kill off this industry, which is a tax generator. It creates wealth and it creates employment. But I do think there will be some changes. We're never going to put the genie back into the bottle with gambling now, remote gambling. It's impossible to go back to the state where we had gambling in land-based casinos and land-based betting shops and so on. This is the modern world. So what we have to try and do is to try and regulate gambling, I believe, in a sensible way so that it promotes social responsibility. I think there will be some changes. I don't think they're as widespread as are being suggested. I don't think there will be a significant clampdown on gambling or remote gambling in Great Britain, but certainly some of those abuses in terms of social responsibility that we've heard about may well be more controlled. It's well acknowledged that the higher risk elements of gambling or remote gambling are slots, casino, bingo games, and I do think there will be more action to control those. I certainly think we're going to be bringing in affordability, loss and deposit limits as a standard fixture in gambling, and that it will be for the operator or for the player to prove they have the ability to fund greater gambling losses than that in the future. I also see some very significant restrictions on advertising, particularly sports shared advertising for gambling operators. I think that's almost a guarantee that there will be significant changes there, if not complete restriction on gambling advertising. And I think there will also be, or there should be, an emphasis on trying to promote the land-based gambling sector, because particularly casinos, land-based casinos, have lost a significant amount of money because of the restrictions that they have. So the older type casinos, no sports betting, restrictions on the activity, on funding gambling and so on. And I do think that the best place for gambling to take place, where it can be regulated, is face-to-face in casinos and betting offices. And I do think that it's only fair that the balance is redressed as far as that's concerned. The Gambling Commission, I sympathise with the position the Gambling Commission is in. It's often criticised. It has a relatively minuscule budget of 19.9 million for 340 staff and this huge industry to regulate. And I do think there will be changes there in terms of allowing the regulator greater power and greater funding to undertake this. And I also think we'll see some sort of gambling ombudsman come in to replace the current ADR providers, so that consumers have proper redress if there are gambling issues. So in a nutshell, I hope that answers some of the changes which I expect, but I do not think the changes will be as significant as some people are suggesting.
Thank you, Richard. Very insightful, and we wait to see what the outcome of that review is, but it could well be quite extensive. And as you say, the Gambling Commission, to fulfill its duties and responsibilities, probably needs greater funding. And we need more tax revenues for that as well. Nick, another phrase that has been used a lot in the gaming industry recently has been of customer affordability. In November, the UK's Gambling Commission opened a consultation on how its online licensees can better ensure customers can afford their gambling spending. Do you agree that more needs to be done by operators in terms of KYC and specifically customer affordability? Is there a greater role for technology in this space? And while you're considering that, we also have a question from the audience in this. And sorry, I'm just trying from Doug Riemann. Is there what is it? Increase? No. I'll get this one for you shortly, but if you can just address the question on KYC and customer affordability, and then I'll find that other question.
Yeah, certainly. Yeah, thank you for that. Well, look, I mean, I think the short answer is yes, more needs to be done, both from a KYC perspective and also better understanding and modeling of what customer affordability actually means. You know, traditionally, you know, and you can see by the fines from the UKGC this year and in subsequent years, or previous years rather, you know, they have started to focus much more heavily on, you know, making sure operators and licensees can actually prove that their customers can afford to gamble what they're gambling. You know, and you know, typically we would look at enhanced due diligence reports to look at, you know, their actual where did they get their funds from, you know, their source of wealth, you know, what profession are they actually in, you know, what outstanding kind of credit facilities and mortgages and assets do they have, and there's a whole plethora of inputs, but it would typically be very much more in a qualitative rather than a quantitative basis, and you know, that requires time to do the research. It takes time for somebody to sit down and make a decision based on the qualitative information that is available as to whether or not, you know, that person, you know, is who they say they are and they can afford to do what they say they can afford. And it was really only applied, you know, for much more higher risk type customer segments, those who really wanted to kind of bet big. And obviously that's moving all the way down to, you know, the much more retail type clients and being able to determine whether or not, you know, they have the wherewithal to be able to gamble. And I think, quote from the UKGC around customer profitability, quote, "We want to see you harnessing the same innovation and tools that are used to determine customer profitability, to drive customer protection. There is perhaps no better way to demonstrate a drive to raising standards than through a genuine and public commitment to meeting your social responsibilities," end quote. Now, what that says to me, and I'm sure everybody would agree here, is that, you know, customer profitability modeling is a pretty mature and pretty automated type of a process. You know, casinos and operators understand customer profitability very, very, very well. So there needs to be some kind of model that needs to be put in place where it can be applied to all customers to work out what their affordability actually looks like. And when I think back to AML type days with in financial institutions, and you look at customer risk modeling, you know, how do you determine whether somebody's high, medium, or low risk, and how do you treat them accordingly? Then, you know, we need to look at factors that can be input into those models to drive consistency, to have an automated response, and to make sure the models are actually effective. And that can be quite a challenging thing because, to my knowledge at the moment, there aren't very sophisticated models available around affordability. And that smacks as well to not really a technology gap per se, but I would say more a data gap. You know, as I say, you know, things like source of wealth, you know, it can be quite easy to come across using different data vendors. But there are other, you know, inputs, and I think this is where the industry needs to kind of think about what other key data points would go into that overall model, and what would make sense. You know, there are niche data vendors out there. We, for example, work with a specialist UK company who accesses UK credit application outcome data. So they're able to have a look at, you know, that individual, all the loan applications they've applied for, any credit that they've got, and what that overall credit model looks like, as well as what the player's profession is. And then if you combine that with, you know, any other gaming specific triggers, such as, you know, I guess the amount, you know, the initial funding, how often they're playing, you know, what the win rate looks like, then, you know, those factors all combined into a risk rating and model, I think could, you know, be a very good way of being proactive about how you manage that interaction. After all, you know, it's in nobody's interest for the player to blow themselves up, which is a kind of a quote I once heard when I was working with a company in the US around retail stock trading. So there are lessons to be learned, I think, from different industries, but really it's around looking at those data sources. You need to have specific data specialists, as well as people who really understand model risk management and validation and testing, and make sure that it's done on an ongoing basis. These models, you want to take a line or draw a line in the sand, look at how they're working, and then assess them probably every 6 to 12 months, depending on the segments. And then that comes down to, I think one of the questions in the chat was around AML kind of like technologies as well, and what could be utilized in order to do more automation. So, transaction monitoring, looking at, value and volume of interactions and deposits and withdrawals, but also building up, really quite niche segments on individuals. So, not being too broad, but, really looking at, the demographics of where that individual is from, their salary, their age, and I'm sure there's a host of other triggers that can go into that, or data points that can go into that, to really hone those models that would be a way of providing long-term sustainability for for the business and the individual who's impacted by this. I think just briefly on the KYC side of things, yes, I think a lot more could be done in terms of validating. I think that was a really surprising poll question, that the actual source of or masking source of funds was an interesting one. What more could be done in order to make that more transparent, and perhaps that's part of the KYC process, is to better understand the individual. So those are just a couple of my thoughts around that.
Nick, thank you very much. And it's very interesting, the issue around source of funds, KYC, and wealth of participants or in the industry. And this is something that needs to be looked at in more detail by operators. And Manfred, there have been many fines by the Gambling Commission where operators have not adequately looked at, let's say, customers' source of funds. Could you explain from your perspective why source of funds, or source of wealth and source of funds checks are becoming so important in the gaming industry?
Thanks. So yes, definitely, and I'm not too surprised with the result of the poll, because this is a concern of the industry, and this is, I would say, the essence of the preventative measures from a money laundering perspective rather than from a terrorism financing perspective. Most people connect AML, KYC, and attributes AML, KYC mainly to document collection, passports, utility bills, etc. When in actual fact, it's a much deeper exercise than that, and we've shifted from a document collecting exercise to an assessment as to what the source of the funds and the source of the wealth is. Now, we distinguish in terms of the two elements, in terms of source of wealth being that economic activity that generated the total wealth of an individual. And then we look at source of funds when we look at a particular transaction. So that's a technical difference between the two. But ultimately, looking at the matter generically, the only way I can really prevent financial crime from the gaming industry is making sure that the funds being used are not illicit, or not generated from crime. Now, if we look at the cases that were referred to, that the UK Gambling Commission has identified as being problematic cases of financial crime within the gaming industry since 2017. And there have been quite a few prominent cases that have been given quite a bit of media coverage as well. It's invariably a case of criminal spend. So in the gaming industry, you don't have the same type of money laundering you'd see in banking or in corporate services. You don't have complex structures. You have individuals who spend the money that is gained illicitly, and they spend it on what is ultimately entertainment. Now, this means that you can have, as Richard mentioned earlier on, individuals who would have stolen money from their employer, which is very often a case of sustaining a gambling habit. And these are the cases that hit the headlines. Now, the only way that one can truly prevent this from happening is by having a profile of the client. So you know who your player is, and you have enough information to be able to monitor the activities of the player on an ongoing basis and see that that level of play, the patterns of play, the type of activity is in line with the profile. And this is where obviously affordability that originated from a responsible gaming perspective, this is where it meets money laundering requirements as well. Because if I know that the income of an individual is limited and his level of spend from a gaming perspective is, I don't know, 60%, 70% of his annual income, then I need to ask the questions to make sure that the source of those funds is legitimate, because this is where I'm exposed to risk of being in a situation where I'm assisting individuals to launder the proceeds of crime. So ultimately, that's what it boils down to.
Thank you. That's really insightful. And for the audience, Themis has conducted quite a lot of investigation in this area and posted a briefing note on sources of wealth and sources of funds on its LinkedIn site. So if you're more interested in best practice and in this area, please take a look. Moving along, because I can't believe that we're now 3/4 of the way through the session. So one final question for the panelists before we move on to the Q&A. Speaking of new payment types, methods such as mobile payments are increasingly quick and easy option for gaming users. However, these are fairly anonymous and typically linked to a phone number rather than a payment card number or a name. Joseph and Nick, would you tell us a bit more about the financial crime risks associated with these and other new technologies in the gaming industry? Joseph, do you want to take that from a Maltese perspective, first of all?
Sure. First and foremost, it is practically against regulations to adopt a payment method which is anonymous. So operators have an obligation that even though they're using such third parties, they need to know who the subject in question is. So they need to do the proper identification and verification. They are allowed to do a level of reliance on third parties. However, they also need to ensure, operators need to ensure that all documentation, verification documentation is readily available, and they are also urged to test such methods, such structures, such mechanisms. So say an operator is adopting a particular payment method, a payment service provider, they need to occasionally, periodically test the third party, request particular documentations on a particular individual, so they ensure that the verification, the documentation is available. However, the verification is also always the responsibility of the gaming operator upon particular thresholds, which is in the spirit of the risk-based approach, of course. So it is highly unlikely that an anonymous payment service provider will be adopted by gaming operators. That would be actually against the laws. However, that doesn't mean there are no risks tied to it, particularly with operators, large operators that adopt various payment service providers. We are seeing new ones emerging very quickly nowadays. So they need to ensure that the risks are controlled, and that the risk assessment, the business risk assessment, is reviewed upon embarking with new third parties. And even if not, on a yearly basis, they have an obligation to review their business risk assessments, and payment delivery channels is one of the 4 fundamental pillars in terms of AML CFT. So we emphasize a lot on this, and we request, as a regulator, we request documentation which proves that such verifications are being adopted. And if there are operators that are allowing anonymous payments, payment transactions, that would be identified as a finding and eventually as a breach of the laws itself. So that is something we have somewhat emphasized in our instruments, legal instruments, implementing procedures, and even regulations.
Joseph, thank you. It sounds very extensive and also quite challenging for operators to adopt new technologies and methods of payment in Malta. Nick, from a practical perspective, from what you've seen, what is your perspective on the use of new payment types and technologies?
Well, I know what we've seen here in the UK recently is the use of mobile phones and being able to pay, using your mobile phone service, which becomes an interesting channel because you could be paying your phone off by credit card essentially. So you're effectively then going against the regulations where you can't fund gaming through credit cards. And I don't think the pace of these technology challenges will or novel ways of getting around regulation, shall we say, will abate because it's in the nature to push the boundaries. I will say though that from what we understand the limits are fairly low, the risks pretty low. I think it's a maximum of £40 on any single day and £240 a month. So you're not gonna blow your mortgage, as it were, with using that potential payment channel. But it's something that I think payment providers need to be aware of. And I think also it comes down to, again, making sure that you really understand the risks within your business of where regulations can be breached. So if you are accepting payment channels like this or even things like Apple Pay and stuff, really understand whether or not there is the ability to circumvent the restrict or the rules and regulations that are in place.
Let me unmute myself. Thank you very much for that, Nick. And let's move on to the Q&A session. And there is one for you, Nick, that I believe is best answered by you. And that is, what is the current and future role for risk automation in AML for gaming? And what are the top lessons and challenges for better success? For example, avoid high false rate positive a high false positive rate for banks and AML typologies for deposits.
Well, I think we could have an entire webinar on that topic. So I think Alex posted that. Thank you for that, Alex.
Great idea.
Yeah, I think the short answer to that is there's an awful lot I think that can be adopted, and I think we really do need to look at automation, as I think it's alluded to earlier on, to make sure that these processes are not too arduous, actually do what they say they're doing, so they can be demonstrated to be supporting affordability. They can be used to demonstrate better, anti-money laundering, particularly when it comes to source of funds and source of wealth, and also better data that inputs into those models. So, the short answer is I think there's a lot that can be done there, and I think there's a lot that can be learned from the financial institutions and their journey that they've been on for the last 20 odd years.
Thank you. Another interesting question, and if I could first of all ask Richard for your views. You talk about the increased focus of regulators in the UK, Malta and elsewhere. However, are you seeing positive examples of best practice and action coming from gaming operators themselves? And if so, can you expand on some of the positive developments in the market?
Yes, sure. Obviously, I'm not going to name any operators, but there is positive action being taken by operators. They, on the whole, they tend to be sort of behind the curve, so they're reactionary rather than proactive in doing this. But I have seen positive examples. So whether we have, say, casinos that are now being set up for more social play, so lower deposit, lower stake per spin. More for social interaction and engagement, passing of time rather than for massive stakes. We've certainly seen a move having been pushed away from VIP players with very large deposits, large losses. And I think casinos have had to come up with this sort of different business model, certainly in Great Britain, given regulatory action that's been taken, that it's better to have a volume of players losing less rather than a small volume of players losing a significant amount. I've seen operators imposing their own affordability limits, so they will have calculators to allow you to say from the outset, and an obligation, mandatory obligation, to set your own deposit and loss limits rather than just being a system that's available to customers. Because what we tend to find is that even though there may be these fabulous tools to manage gaming spend, actually people just want to get on and gamble. And then if it's not made mandatory at the outset that somebody says, look, I can afford to lose £100 a month or £200 a month, that then they don't do it. So I think all of those things are positive. I would say, you know, we've had a combination of different things. I'm seeing that GamStop is proving to be pretty effective in the UK, obviously funded by the operators, not necessarily generated by them in the first place, but that's proving to be particularly effective. But I do think this whole social responsibility message is now getting through to operators, and you know, it is an incredibly difficult position to be in as an operator. I always liken this to the sort of Porsche showroom where the salesman has to say, sorry, you can't buy a car because you bought a Porsche last year, so you can't buy one now. It's incredibly difficult to manage your business where your profitability comes from customers who at the end of the day are losing money to you, and to turn away those good customers. So I sympathize with that. It's an incredibly difficult challenge to do in terms of social responsibility, but I do think they are you know, getting on top of the game and realizing that there is no benefit long term from taking advantage of vulnerable people.
Thank you, Richard. Yeah, there is a lot to learn, and as you say, operators are beginning to adopt more of a social responsibility approach. Joseph, what is your perspective from a Maltese regulator perspective in terms of best practice that you're seeing from local operators?
I think one of the most fundamental best practice we're seeing is the emphasis on the risk-based approach. So the adoption of systems which embody the risk-based approach. We've seen introduction of AI systems as well, which are focusing on the betting patterns and transaction monitoring, which are heavily assisting the gaming operators. Let's not forget that this is a business which transacts thousands and thousands of transactions per second, which is very, very difficult for any human being to sort of monitor. So, however, that could also work against the operators, particularly if the setup of such monitoring produces a lot of false positives. So I think there is a calibration process at this point in time. Operators discuss between them as well, and we've seen operators publishing papers, particularly large operators, which publish papers which assist other smaller operators or medium-sized operators in how to properly monitor and do apply control mechanisms on AML CFT. I believe, however, that it is still our responsibility as an authority and the FIUs in the case of Malta to keep that overarching view, that overarching view by analyzing STRs, by analyzing case scenarios, and keep feeding back the operators. Unless we maintain that, we cannot expect operators to do things on their own. Of course, that information could be eventually translated into systems and you know what. But however, the overarching view will always be held at authority level, I believe.
Joseph, thank you very much. And looks like we're about to run out of time. And I'd like to, first of all, thank the audience for attending and participating in this webinar. Thank you for your questions. I'm sorry that we haven't been able to address all of them. They are very interesting. They will be put on the Themis Senate, which is now coming, which is now shown online. And those questions will be placed there for the panelists to answer. And if there are any further questions that any of you should have that you would like to be addressed, please post them on the Themis Senate, and our panelists will address them the best way they can. I'd also like to thank the panelists, Joseph, Attard, Manfred Galdez, Richard Williams, and Nick Parfitt. for participating and making this such an insightful and engaging discussion, where we've had to cover a wide range of topics in the financial crime in the gaming industry. This webinar will be available on the Themis website in due course. It has been recorded, so you can go back to it to pick up some of the gems that have been imparted during the course of the last hour. I look forward to future events on financial crime and anti-financial crime actions in the gaming sector with the four of you and with our audience. And thank you very much.